Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday the 4th of July comes to you from London. And of course it's US Independence Day today, which means that a lot of the markets will be closed, and so not much going on. And if we look at the US dollar, we're just slightly coming back above the cloud here, bouncing off the floor. Maybe we're just seeing a little bit of a bounce on support here on the long-term chart, but it's too early to say really whether we've found support there. The euro is through the cloud, but again just falling away on the short term, so we're just moving back into a slightly bearish position there on the short-term chart. And the yen against the dollar. Dollar is just falling at the moment, so a little bit of yen strength returning, but the transition is occurring that we're seeing stronger dollar, weaker yen. British pound, we're just seeing here moving below the cloud on price, but not quite on the lagging line. Failure to make a higher high, so we are seeing quite strong resistance around this 130 mark, and of course the long-term picture is still bearish. Against the euro, sterling is just looking a little bit stronger above the cloud, but the medium and short-term charts are still bearish. And against the Swiss franc, much the same picture. Aussie dollar, we're seeing back to the 170 level, but again just struggling to break that high of last week. So we are just seeing resistance generally there for sterling. Now the US markets are closed today, as I mentioned, but it's what they did last night that's important for tomorrow. We see here the S&P 500 is below the cloud on the short-term chart. The medium and long-term chart's still bullish. The downside target nearly met, but not quite, so still too hard to say if we've got further downside. But the real worry is the Nasdaq. These were the lows that we saw a couple of weeks ago. Around the 12th and 15th of July. We smashed through those, so lower lows, so that is worrying. We're not through with the cloud, and we've got further to go to find support, but we do have downside targets now of 3.5% and 6% downside. So when the market opens tomorrow, we shouldn't be too surprised to see Nasdaq having another sell-off. Now we might see some recoveries in the short term, but looks like we haven't found the floor yet, so that is a little bit worrying for the US market. Looking at the Dow Jones Index, we're still bullish above the cloud on the Dow, so those blue chip stocks still looking strong, and even the Russell 2000 also looking strong. So the broader market is okay. It's just tech is where we're seeing that sell-off. So we've got to just be aware of that, and we're seeing that show through on the Nasdaq E-mini as well, down targets of 3 targets to around 4% lower. So it does look like the Nasdaq has got further to fall. The FTSE 100 index is bearish this morning, below the cloud still on the short-term chart. We've got downside targets between 1.25% and 1.75%, and the FTSE 250 we've got downside targets here of between 2.2 and 4.7%. So we are seeing still potential for the mid-caps to sell off in the UK. The DAX is bearish below the cloud on the short term, just finding support on the medium term. The Nikkei down very slightly, just again short term looking a bit weak, and the Hang Seng falling quite sharply on the short term chart there. So we are just seeing a sell-off globally in a lot of markets. And the Shanghai index is holding up on the short term, so there's one bright spot. The Sensex is just struggling at the moment at the cloud, down very slightly at the moment, and the Australian market actually up 1.75% on a weaker Australian dollar, and we are just seeing that short-term chart returning to bullish. Brent crude is selling off slightly, but it's enjoying a strong short-term trend at the moment, a bounce off the bottom in the low 40s, and WTI much the same picture, but we do expect the seasonality to kick in again at some point. US nat gas nudging this $3 mark, but still bearish on the short-term chart. And again, a lot of softs will be closed today for the holiday. Taking a look at gold, gold is bearish below the cloud. We've got downside targets to 12.12, 12.18, and at the moment we're sitting at we nudged that 12.20 level. We are bearish in the medium term now below the cloud, so we are just pulling back here on gold. We still do have these upside targets here, 14%, and on the longer term chart, 24 and 39%. But we are just pulling back all the time just to test this transition. So still bullish in the long term, but the medium and short term charts looking bearish. And silver also now turning bearish on all 3 time frames, so that's quite worrying. Not the picture that we see on gold, where we've got downside pressure and a downward trend. Taking a look at the 10-year Treasury yields, just sitting at 2.35%, so still in those 230s is quite strong. Now the tech bellwethers, we're looking at Apple not making new lows like the Nasdaq, so Apple is actually showing relative strength. Google is definitely looking like Nasdaq or worse, so we're seeing real relative weakness on Google, and Google is a real driver for what the Nasdaq's doing at the moment. Amazon is actually not quite as bearish as it was a couple of weeks ago, so that's relatively strong, and the same is true of Facebook back below the 150 level. Microsoft is looking more like the market, so we are just seeing relative weakness there as well. Now that's it for today. With the US holiday today, not much action. Until tomorrow, happy charting. See you then.